Hello, and welcome to this webinar announcing the winners of the Banker's Transaction Banking Awards 2021. I'm Joy Macknight, editor of The Banker. Today I have several transaction banking experts joining me via video link to discuss trends in the transaction banking industry in addition to celebrating this year's awards winners. So first, I would like to invite my panelists to introduce themselves. Al?
Hello, everyone. My name's Al Carpetto. I've been in transaction banking the majority of my career. Spent many years at JP Morgan running their FI business. Moved on to Royal Bank of Scotland to do the same for the Americas. Moved on from there to run the commercial payments business at KeyBank. And then I made a switch into software, and I worked at Intellect Design for a number of years, focusing on payment software. And then I kind of finished up at Western Union, which was a fintech. So from my perspective, I have a broad view of banks, both global, regional, some software, and some fintech.
Thank you for having me. Francesco Burelli. I'm from a boutique strategy firm called Arkwright. 22 years in payments banking and transaction banking, starting from HSBC, Midland Bank when I started, and HSBC when I got out of it and into consulting. A long career in payments, transaction banking, and digital. I've seen the convergence emerging from the old days of the dot-com revolution up to the current days where digital is pervasive and across affecting any industry. As I said, I work with Arkwright, a boutique strategy firm, and at the same time, I am a learning coach at INSEAD, Executive Education for strategy, digital transformation, and innovation programs. And once again, thank you for having me.
My name is Jason Eckberg. I'm a partner at Oliver Wyman. I've been in the industry, I guess, for about 25 years, though I guess maybe this lighting might not suggest I'm that age. But in any case, I've started my career actually out as a corporate treasurer. I used to run Royal Dutch Shell's upstream treasury, and that was my first exposure to transaction bankers who are trying to sell me structured finance, working capital, supply chain. I actually used that to transition where I worked at JP Morgan as well as Citi across a range of transaction banking businesses across a number of global markets. I've been in consulting for about the last 15 years, primarily based out of Asia, but I've been doing transaction banking really across 30 markets, but predominantly for the last 8 years, really in mainland China, where I've been involved in a number of the digital innovations that we really see transforming the transaction banking landscape in Asia.
Glad to be here. My name is Eric Lee. I'm currently the head of transaction banking research for Coalition Greenwich. So unlike the other panelists here, I haven't really moved around a lot. So I've been within Coalition for the past decade and have been analyzing the transaction banking industry from the sort of like more from a numerical numbers perspective, providing advices to our clients on the key trends in the industry.
Thanks so much for joining me for this awards webinar panel. The transaction banking business has toughed out a difficult year, proving yet again its resiliency and steadfastness through testing times. Recently, Jane Fraser, CEO of Citi, referred to the U.S. bank's trade and transaction services vertical as our jewel in the crown, which is an indication of the extent to which many chief executives value the franchise. But that's not to say that the sector isn't facing some challenges, including lower margins and declining revenues, increasing competition, the mass shift to digital seen across the board during the pandemic, which required investment and resources, and also new market developments such as real-time payments, open banking, and crypto assets, as well as central bank digital currencies. So there's a lot of new things to keep up with, and these issues are compounded by those that are working in multiple jurisdictions. So clearly, we're witnessing a faster pace of change in the transaction banking business than seen historically. This all leads to some impressive innovations in this year's submissions. But before we get to announcing the first set of category winners, let's start by exploring the trends our panelists are seeing from their vantage points in the transaction banking arena. Eric, what have been the overarching trends in the transaction banking business during the past year in light of the COVID-19 pandemic?
Sure. So despite that, we are facing the new Delta variant. The backdrop we are talking about today is the global economy is actually doing relatively well this year, driven by business activities and the consumer spending. So I do hope that all of your readers have had the chance to take a well-deserved summer holiday somewhere. So all of this would have implications on the transaction banking industry. So we at Coalition Greenwich, we observed the three major trends in the past year because of COVID. Number one being banks, irrespective you are a big bank or bank, has been accelerating their digitalization and automation process at lightning speed. I think this is for them to future-proof their business model because nobody knows whether we're going to rely on these sorts of things in the future. And also this is a reflection of the new business normality. Whatever excuses people had pre-pandemic of not using the digital way to engage with each other, by and large has gone away. The second big trend, I think that is the client has been sort of choosing their transaction banking service provider more carefully than ever. I don't think they want to work with 100 different providers in different markets they're operating in. And also, I don't think they just want to choose the service provider because someone gives them a very competitive pricing. I think nowadays the corporate clients are looking at a reliable and a capable service provider who can help them navigate in the post-pandemic world. And lastly, I think we talked about it, the supply chain challenge remains because of the COVID restrictions. And in light of the surging import and export trade volumes as well as payment volumes, I think all banks has put in extra resources, both in terms of human capital as well as financial capital, to help their client managing the surging demand that everybody is facing nowadays.
With COVID, what we have seen is a bit of reshuffling of value chains, and there's a trend of nearshoring or reshoring for specific industries. So this is something that is having an impact on the demand of solutions from the side of treasuries. Similarly, what we have is still ripples of financial tensions within the overall value chain in specific industries. And this is where we are seeing banks working closer with treasurer in order to work out liquidity solutions and increase the robustness of the value chains throughout the various participants in order to keep withstanding the last ripples after ripples of the COVID shock, and finally to get the industry adapting throughout. There is a digital transformation and deployment of software that are now becoming business as usual. So what we were considering innovative in the previous years in terms of rollout of artificial intelligence, of robotics and similar, that is pretty standard for some companies. So if we have to look at innovative solution, we have to look beyond technology by itself into the application and how this technology is used to generate value for customer, for the transaction bank itself, and how this is used to capture value for shareholders.
In preparation for this panel, aside from what I read and keep up with, I reached out to a number of colleagues and people that I know at different banks, and it was an overarching, predominant focus on digital acceleration, right? So, picking up on what some of the other gentlemen have already said, banks, in order to overcome some of the COVID challenges or the pandemic challenges, they've really taken years of planned innovation and accelerated in a 10-month period. I mean, and you see some of the things that banks have done. It's quite amazing. It makes you realize that they actually can move faster if they want to. But from the standpoint of the things that the digital acceleration will do, it really will level the playing space for many of the banks who are competing with people outside of their own footprint. Right, they can reach many more people. I think when you think about account openings, faster processing, more reliable, things like data maintenance, data retrieval, right? The biggest thing that I think a lot of people want is access to their data and what they can do with it. So I do believe that this will continue. People will keep pouring money into the digital acceleration. And then, I mean, I know we'll talk about other innovation things, but I'm seeing a lot of effort being put into APIs as well. But I think digital is the top priority.
And Jason, what are financial institutions and corporates asking for or needing to ensure that they prosper during these unprecedented times?
Yeah, so happy to take that pivot, Joy. What I'll reference is really what I see in Asia. I don't want to suggest it's phenomena that you'll see in the Western markets, but from what corporates are really looking for from their corporate transaction banks, there's a number of things. Number one, they're looking for advisory. I think it's very easy to kind of, still focus on COVID. I understand. It's clearly kind of front and center, and we're seeing variations of it, and all of us are learning kind of the Greek alphabet according to it. But there are many parts, for example, China moved quite aggressively on, 15, 16 months ago from that. But what COVID has really brought forth is that everybody's talking about advisory and everybody's talking about digital. The challenge is that actually corporates, are going through the same digital transformation, and they need their banks to advise them on that. Because actually, if I'm a corporate transaction bank, I'm seeing 10, 15 global players in energy. I'm seeing 15, 20 global players in healthcare. I'm seeing leading insurers. How can I actually bring those experiences and perspective, no different consultant would, to their client around advisory? That could be API advisory. That could be new treasury innovation and technology. So the first one is just, advisory. I think the second one, really, that their corporate clients are really kind of looking for banks to play a role in, is also more than ever now, ESG is a top theme. ESG is a top theme. Every client is now increasingly under pressure from a regulatory perspective, especially in Asia as well as in Europe and increasingly in the US. What does that really mean for them and how they should be thinking about it? And again, banks have such a trove of experience working with the likes of British Petroleum, Royal Dutch Shell, and how they can really harness that to be a partner for their corporate clients. I think that's one. And I think another thing that I would just really highlight is that more than ever, clients need banks to really think beyond banking. The reality is that in many cases, transaction banking is a highly commoditized business. I mean, transaction banking has been around since the time of the Greeks and the Romans. If you think about payments and trade finance, but they need banks to really step up and do more. And what I think is interesting is this whole wave of banks focusing on sector and ecosystem propositions. How can I really embed myself in the day-to-day, not just treasury, but the procurement, the distribution, everything that goes in and growing and running a business, develop much more tailored propositions. And you're seeing, the global banks aggressively doubling down on those sectors that they want to win in. So, for me, if I think about the next 18 to 24 months, what's really going to matter, digital advisory is going to continue to be front and center. The role of banks as a partner for ESG transformations, the role as banks is really helping help clients run and grow their businesses much more from a sector tailoring and an ecosystem proposition.
And Francesco, in which area of transaction banking are you seeing the greatest innovation happening?
Okay, thank you. That's a very interesting question. So, looking at the award submissions, while we have a lot of activity in payments, currently the most innovation was seen in cash management, securities, and trade finance. And I say curiously because we've seen a lot of activity around cross-border real-time payments, infrastructure and innovation being rolled out. Nonetheless, going back to the award submissions, in particular, we got those three areas: cash management, security, and trade finance. As I said earlier on, previous years, the innovation was mainly constituted by the rollout of specific technologies. Now this is no longer the case, maybe with the exception of securities, that is proving an industry where these digital technology have not yet fully been adopted and realized in their potential. So in there, we still got a digital transition rollouts to take place and so on that can make a difference. What we have found the most interesting innovation-wise are the solutions that are being rolled out, for example, in cash management with the ability to concentrate and manage liquidity across accounts. Now, treasuries have had the benefit for a long time of product like single account, but what we have seen now is a different level of sophistication of these value propositions that offer the ability to operate across an increasing number of currencies, of jurisdictions, an increasing number of accounts and sub-accounts and so on, that are enabling a complete different degree of agility in liquidity management. On the trade finance space, we are seeing the emergence of increasingly customer-tailored cross-collaboration where treasuries are working together with the banks as partners, well beyond a customer-supplier type of logic, leveraging, for example, as I was mentioning earlier on, corporate liquidity from the corporate side to provide financing throughout the value chain out of information and risk scoring provided or developed together in partnership with the bank beyond their immediate suppliers. Cross-border supplier enrollment solution, value chain-wide collaborations are being developed along supply chain. And this is now starting happening in trade finance too. Once again, we see the leverage of distributed ledgers used to share information, to share the status of a specific process and so on. But while before this was typical in supply chain, now it's starting becoming adopted quite widely in trade finance. So here we have the emergence of networks, of consortiums, similar to other parts of the industries. Ultimately, this is also going to become a platform and ecosystem play where collaboration is going to be the key of the game.
So I totally agree with Francesco, what he said about there has been a great amount of innovation across cash management, securities, and trade. But what actually I think that the greatest of the all innovation that banks have is exactly what they want to do in the sustainability perspective. All the measures, initiatives that they have come up with is ESG, because this is not just that they are doing something to solve one of the problems of their client. This is actually they are coming up with something to solve the problems of our entire society.
But I'm also seeing, and this is more from, I would say, the vendor or the fintech software space, the development of artificial intelligence into the payment business. This is becoming, and you won't hear a lot of it from the banks because the banks are going to rely more on the vendors to bring this forward. It's a big investment to do it, but no different than what we experience on our smartphones when you can intuitively go from one thing to the other very easily. This is the type of technology that they're trying to develop in the payment space. I mean, when I was at the software company I worked at, we were developing software that would allow a treasurer to log in and look at his positions depending upon where they stood, whether he would have to be a net borrower or have to do something with those funds. And you would allow them to build in the rules to do that intuitive decision making to make their life a little easier. It was quite interesting and exciting, but it's far from where it needs to be. But I see, in addition to what was already said, I see artificial intelligence as being something that you'll hear more about.
So thanks for your insights. Now let's announce the category winners. The winner for cash management is Citi. Real-time liquidity sharing and instant payment solutions were two innovations that impressed the judges. The allocation of liquidity in line with real-time payments is a big step forward in the industry. Extending payment tracking to other providers also stood out as an innovative service to assist customers. And the winner for payments is BNY Mellon. BNY Mellon's introduction of the RTP bill pay solution and account validation services impressed the judges, exhibiting how the bank has tackled specific pain points and made operations easier for clients. And the winner in the Securities Services category is BNP Paribas. The judges were impressed by the bank's collaboration with wealth tech firm Allfunds, which will improve operational efficiency through the fund buying and selling process for institutional clients. Also, the move to automated processing of asset servicing documents, which frees up staff for other value-add activities, was underlined by the judges. The winner of the supply chain finance category is Bank of America. The development of the Supplier Enabler portal stood out for the judges as it helped clients to reach down their supply chains in an efficient manner and giving greater oversight. The focus on environmental, social, and governance, ESG, and improving supplier networks were also noted. The bank that picked up the trade finance accolade is Standard Chartered. The judges were impressed with how the bank focused on addressing specific issues that had impacted its clients, such as working on the export letter of credit documentation pain points to simplify the process. The acknowledgement of the need for more sustainable trade was also noted.
The banker, a big thank you for awarding us again the Best Trade Finance Bank Award this year. Such an honor. And a big thank you to our team. Well done, guys. Really proud of our work. But I believe the biggest thank you goes to our clients. By sitting down with you and listening to your requirements in these challenging times, it was very clear that we need to address the ability to secure your supply chain, make them resilient, and also prioritize your supply chain. By applying digital tools and co-creating with you a solution which fits your business model, I think we truly differentiated. So a big thank you, clients, and a big thank you again, the banker. Very proud. Thank you so much.
Congratulations to all the winners in the different categories. Before we move on to announcing the regional winners and crowning the overall global champion in transaction banking, I'd like to bring back my panelists for another round of questions. So one of my takeaways from reading the entries this year is that many banks were looking to embed environmental, social, and governance, or ESG, considerations in their product and service offerings. And while areas like trade or supply chain finance may lend themselves more to driving sustainability and allow banks to support their clients in addressing their green ambitions, ESG considerations were also present in cash management and payments, as well as in the regional submissions. So Al, why do you think that ESG issues are really coming to the fore for both banks and corporates?
Well, my view is a lot of this is being driven by social awareness, social media. These issues always existed. It's just much more in the forefront of everybody's mind. You have a number of people pushing these agendas and creating this awareness. So for people who are investors, they are doing a much deeper dive into the companies they may potentially invest in or want to be a stockholder in. Issues like carbon emissions, toxic emissions, water stress. I mean, some of the stuff that I've read when people are making a decision on investments, they're looking at what that company's footprint is, what they're doing for the carbon emissions. So I think the reason these are becoming much more prevalent is again, social media is very powerful. And they are important issues, and people are finally paying attention because there are financial implications if your people stop investing in your company. So I think that's one of the main drivers.
Social media is that it has a huge real economy impact. I'm based in China, and some of the trade-offs you start making geopolitically around this are, well, do I shut down coal plants? Well, what does that mean for bringing natural gas plants online when I start going into winter? These require some very bold commitments, and social media and political activists are really bringing this to the forefront. I know in China, for example, if you look at some of the social media research that our sister company Lippincott does, you'll actually see that there's a high propensity for Chinese consumers to direct investment or spend towards green products. Now, all of this has to be supported by the banks, because the banks have to lend into these and support it. But typically it involves structured and finance type propositions. But how do you fund it? Well, then you have green deposit products, right? That really kind of get special treatment. You then want to be able to have green supply chain products and green trade finance products. And, all this ecosystem of products that are going to go in to support the business, the banks are starting to develop. And in many cases, it's not like they have a lot to leverage. I mean, developing a green supply chain solution is very different than, a classic supply chain solution, just because you can't treat every vendor as if they're the same. You have to really understand how green they are. And so I think it's really a renaissance for banking. And I think it's personally, for me, as to channel Eric's energy, it's something that has huge global consequences. I think it's wonderful that it's raising to the forefront. I think it's an opportunity for transaction banks to really lead from the front, because at the end of the day, the transaction bankers tend to be the ones who are in the trenches, working with treasurers, procurement officers, finance teams to really make the business run and grow. And they will be the coal miners who are helping drive this transformation.
So as all of you probably know, that banks is actually in a perfect situation to contribute to this issue or help with the issue. Why is that? Because banks' business is intertwined with every industry in our society. So as a result of that, I think that if you ask one of the, someone in the society have to play in this role, someone could have argued that it has to be a government, it has to be a centrally controlled organization. But don't forget about that. It is banks who actually have the richness to every single customer in the society. As a result of that, they can be a great facilitator as well as an enabler in this whole process.
And Francesco, do you think a focus on sustainability can really improve the relationship between the banks and their customers? And then can banks really drive value from that?
Thank you. So in terms of dynamics, what we've seen, we got an avalanche effect that started many years ago. So we are at tipping point out of a combination of exogenous factors like increase and severity of extreme weather disasters, the political attention that these teams are commanding, and so on. And on the other side, we got endogenous factors such as the maturity around these teams within the industry. So overall, the industry has reached a tipping point where for banking and for any other type of society and economic infrastructure, ESG is on the fore of the board agenda. Now, when I mean tipping point, the tipping point means that within the overall system of many moving parts exercising pressure on each other, we are starting seeing a lot of action. So we got, for example, the principle of responsible banking being championed by the United Nations Environment Program Finance Initiative. As of this morning, when I checked, there were over 250 signatory banks. So this is increasing the momentum. The Net Zero Banking Alliance, bringing together 53 banks out of 27 countries and so on. Now, it is to be said also that ESG, while everybody refers to it on an environmental impact side, has also a social and a governance side of it with very important themes like equality, quality of life, financial inclusion. And then finally, we got also direct and indirect sustainability in an environmental impact that is right now the big elephant in the room. Now, this said, so overall, we got momentum across a number of different initiatives. In terms of value to customers, so leaving aside the philosophical considerations about the nature of value, how it is created for shareholders in general and captured for stakeholders, created for stakeholders and captured for shareholders, there is a pervasive universal ESG pressure coming from all directions. scrutiny from the press, regulator, pressure from investor, customers, and employees. So if we have to take a very basic, let's say, minimalist, reductionist, cynical type of view, corporations, the customers of transaction banking businesses are subject to similar scrutiny and demands. One of these, on the side of this corporate, making changes to meet targets require investment, changes in procurement, operation, and logistics. And the more you are into the physical production type of industry, the logistics, the more difficult it is to change the rule of the games upstream and downstream in what you got in your own operation to provide an impact. So within this type of context, if we have to start looking at, for example, environmental impact, the most immediate measure that any corporation can take, it is on regards of responsible sourcing. That means enforcing ESG criteria and requirements out of suppliers. Now, validating, defining these is not easy. There's not yet a set of universal measures to evaluate these, but nonetheless, this is a minimalist type of approach. On the other side, banks, by the virtue of their position, are in an ideal role to help customer to their own advisory. And this would also offer banks the ability to start differentiating from all the new entrants that are starting, looking at commoditizing even further what the actual products were. So the value of banking is no longer in the provision of just a loan, but it is on all the services that are built around the customer relationship, of which advisory is one of those. And in terms of value, for the organization that will be able to capitalize on this knowledge and opportunity, there is the opportunity, that there is the potential to be the supplier of choice, to differentiate from competition until everybody is going to reach the same level of proficiency in the space. There is the ability to leverage a more transparent and better communicated ESG position within their own services. The percentage or the share of the involvement of green financing that any player may have within their own portfolio. So bettering relationship with regulators, being ESG champion, becoming a preferred employer of choice, whereas a number of customer and potential employees are becoming more sensitive to this space.
You know, if I think back historically about the perception in media and society of bankers, it's tended to be very volatile. You know, be it movies from Wall Street, you know, and so forth, that haven't necessarily had the best portrayal of bankers, which is, you know, one can argue how accurate it really is. But I do think this is a real opportunity for banks to deliver on something that is much bigger than, you know, any of us probably individually have participated in. So from that perspective, I think it's an amazing branding, let alone real impact. So I do think it has some, you know, can definitely help them get closer to consumers, if only in the eye of investors and the perception of the broader community. That said, again, it was said earlier that, you know, banks are much more now than ever advisors, much more now than ever advisors. And, you know, I come from a consultant, but I was a banker by background before. And what I know is that, you know, we as bankers tend to look at products, and maybe we even look at solutions, because I'm bringing trade and payments together. Now I've got working capital. But the reality is we see so many practices because of the clients we see locally, regionally, and globally. We see technology providers. We see infrastructure providers. We see consumer clients. We see the whole thing that goes into supporting ESG. And the reality is that banks are able to pull that together. They can be true partners for transitioning, because on the one hand, they're banking the ERP, they're banking the treasury workstation providers, but they're also banking advisories. Okay, they're also banking other competitors and peers that they can leverage those experiences and draw upon. So they are arguably in one of the best positions to really draw upon those experiences and really use it to unlock the transformation of their clients. At the same time, I would just say, it's also up to banks to really build the platform that's going to channel funding and investment to support this transition. And that's about innovation in ESG investment products. That's about creating, savings products that have an ESG angle to it. It's about enabling supply chain, because while we can bring a lot of great insight to help transitions, we also need the relevant products to really make it happen. So I think from that perspective, I think it's quite amazing, not only for how they can be deeper, help me run and grow my business or transform my business partners to their clients, but also generate real value, because arguably banking is incredibly commoditized. And we'll talk about this later about the transformation of the business model. But, those banks that can really get ahead of the curve on ESG, I think really could carve out something sustainable for themselves, no pun intended, for the foreseeable near term.
And Eric, what role can transaction banks play in the drive to build back better after the pandemic?
Sure. I think that's a very, very interesting question. I think that the panelists all talks about all the great initiatives a lot of banks has been doing, ranging from green deposits, sustainable supply chain, or the ESG scoring to lending rates, all of that. This is all great work. I think all the banks should continue to do with that. But what I can also think from another angle for this thing is, I like what Frank Jasko said is, banks should aim to become the ESG champion. They should be a leader in this drive rather than just a facilitator. What I mean by that is, if you think about everybody love innovation, thinks about if we put together a lot of great people together, they will be able to come up with really innovative solutions to a lot of very difficult problems. And this is exactly why a lot of banks in the world nowadays have a fintech incubator. This is where they want to incentivize all the innovation to solve all sorts of problems that banks could possibly run into. So my question for all the banks that is listening to this webcast is, why can't you have the same ESG incubator? Because it doesn't matter how big you are still alone in your own organization. If you collect enough smart people together collectively, I do believe that we're going to have a lot of very innovative solutions to the problems that we never thought is ever going to be solved by banks itself. This is where I think that banks, transaction banks in the post-pandemic world, if they do have the ammunition to become the leader of the ESG drive for our society, this is exactly where they should do.
I think transaction banks and fintechs can play a huge role in building back, because people, as we talked a little bit earlier, are craving this technology to improve their everyday life, right? So some of the analogies that I've used with people is, and especially when you look at who the decision makers are now becoming, right? Those decision makers are my children. They're all in the workforce now. They grew up with technology that they expect to have at work, not just for their personal use. So it's up to these banks and fintechs and software companies to really start to create software that adds value to their everyday life. Some of the comments that were made earlier, banks are in a position to do this. Obviously, it costs money. It may start to widen the field in terms of who can play and who can't, because it costs a lot of money. And then there's a whole nother track about building versus buying, right? So I've been on both sides of that. But at the end of the day, the digital technology that exists in the personal space is something that needs to be developed in a much more robust way in the mainstream corporate world for business purposes.
So I just want to build on Al's point. I do think that you're seeing this interesting transformation in banks broadly, but specifically in transaction banks, about their identity and how they look at themselves. Right? Transaction banking used to be what I call the heavy metal business. It was all infrastructure, heavy metal. That's what it was. And network. Now it's really shifting towards an information business, an insight business, an innovation business. And I think some banks are making that leap. Some banks aren't. Now, one of my clients in Asia, they've made that leap. In fact, they're a conglomerate, and they are looking to deploy. They're one of the leading ESG providers in the space that they play, and they recognize that if they themselves can be cutting edge, how could they commercialize that with their clients, be it investors, be it corporates, their supply chains, the consumers that buy the B2C goods. They've made that transition. And I think banks should really get ahead of that for understanding what ESG means for them, and start looking at how they can commercialize that. Again, I think have the potential to really, if you will, carve a space out for them in a market that arguably for the next 20 or 30 years until we actually achieve Paris climate commitments 2050 or 26 is going to be massive investment. But it requires banks to make that leap of faith that I'm no longer a heavy metal. I'm no longer an infrastructure. I'm insights. I'm innovation. That's what I am.
Excellent.
To be true, we are seeing that type of trend already happening within specific value chain. The value is no longer the power within a specific deal is no longer coming out of just the access to massive amount of liquidity. It is about the data. It is about how the data is shared. It's about the partners that the bank is working with. It's about customer intimacy, how close the bank, the treasurer is with the treasurer, and how it can influence decision, how these decisions together, so this collaboration is creating value for both. So there is this general trend that is applying to ESG, but is also very, very much core to the new role that transaction banking is becoming into, is growing into, evolving, as Jason was saying, from being heavy metal into being a data-rich, intelligence, leveraging, collaboration-driven type of business, like we've seen in many other industries. Like the borders are starting falling down around it, where integration is the key of the game.
And now we will celebrate the innovators in transaction banking from around the world. The regional winner for Africa is Société Générale. The bank's pan-continental approach and the support for green developments impressed the judges, as well as how the development of the host-to-host solution has supported the needs of smaller institutions and promoted digitalization transformation. The regional winner for Asia Pacific is HSBC. The judges were impressed by the bank's localized approach to the services it offered, such as the application of the distributed ledger technology with Singapore Exchange and Temasek Holdings, and working on the first blockchain cross-border transaction between New Zealand and China. The focus on improving sustainability was also noted. Central and Eastern Europe's winner is Sberbank. The bank showed impressive progress in its implementation of digital offerings for corporate treasuries with the Sber CIB terminal, and how the move towards a customer-centric approach in operating had brought about real innovations in the services offered. The regional winner for Latin America is Santander. The bank's highly comprehensive coverage of the region and the tailored responses created to tackle issues seen in specific markets really impressed the judges, such as the e-check in Argentina, which was developed due to COVID-19. And the winning transaction bank in the Middle East is HSBC. The bank's development of the first green trade finance facility and first green guarantee issued in the region was applauded by the judges. The introduction of virtual debit cards for a company working to produce equipment to fight the pandemic showed the bank's ability to respond quickly when needed. The regional winner for North America is Bank of America. The bank's development of its complete AP solution to help with digitization of accounts payable departments stood out for the judges. Also, the bank's move to take a proactive approach to helping to protect clients against the onslaught of cyber attacks seen during the pandemic was highlighted. The winner for Western Europe is UniCredit. Our judges were impressed by the bank's work to further the development of digital services for its clients, such as the cash management solutions devised to support cash controls during the pandemic. And the moment you've all been waiting for, And for the second consecutive year, the global winner of the Bankers Transaction Banking Awards 2021 is Citi. Citi's impressive performance across all of the categories it entered saw it earn high scores from a number of the judges. The bank demonstrated how it's working on the ground to provide regionally focused services while delivering on a global scale.
We're delighted and deeply honored to be presented with the Bankers Annual Award for Best Global Transaction Bank, especially as this represents the second consecutive year that Citi has been recognized as best in class. This is a great recognition of the extraordinary efforts of my colleagues at Citi's Treasury and Trade Solutions, who have excelled throughout some of the most challenging conditions any one of us have ever experienced. During these times, we continue to invest in leading technologies, delivering state-of-the-art digital solutions to help our clients operate seamlessly and securely around the world. We remain steadfast in our commitment across the globe to supporting our clients as they pursue their new growth agendas. We thank you for this award.
Congratulations to all the regional winners and Citi, the global champion of the Bankers Transaction Banking Awards for the second year in a row. As we are coming to the end of the webinar, I have just a few more questions for my esteemed panelists. Jason, is there a need for a rethink of the transaction banking business model? Why or why not?
Thanks, Joy. I mean, I tend to be one who, is a bit provocative in my thinking. And so, if you ask me this, I would say fundamentally there's a need for rethink. It used to be, as we were talking about earlier, that transaction banking was a heavy metal business. It was driven by network. If I had the most branches across the globe, then I could be a dominant transaction bank. It was driven by I own it all. I'm going to own my channel, my product processors, my data mappers, all the way to infrastructure and local rails. I'm going to own it all. If I had the best products and I had the richest product suite, I could win. All my partners were vendors. That's how it was. But, you start looking at the transformation that's happening, and Francisco was talking about it earlier, about the how institutions are shifting to much more towards knowledge driven. And technology has broken down that competitive moat that transaction banks have. It's no longer corresponding banking, anymore. Now you can have startups who are able to use phone numbers and alternative, crypto and Bitcoin to basically transfer money at a fraction of the cost instantaneous. You no longer have to own it all. There's partners and best of breed out there and modular technology that allows you to have microservices to innovate. It's no longer around products and solutions. People want insights. They want value. They want to know something they don't know. And vendors are increasingly important as strategic partners. You look at some of the global banks out there and you look at their valuations versus fintechs. I mean, some of these fintechs are the size of global banks, if not very close to. And that all came at a fraction of what the global banks have invested over 150 years because they've got something right. So the competitive moat is evaporating in many cases. Technology is changing the way that institutions compete. If it's data and insights, as Francisco was talking about, if it's cloud-based services that allow you to deliver something at a fraction of the cost. And so I think there is a fundamental need. And I would say it's more from shifting from network and infrastructure and scale to much more insights and value added, which is going to require banks to really rethink what they want to be when they grow up. Do they want to be specialists in certain sectors that they know are going to be transforming? Do they want to be a specialist in something that's transforming the whole industry, i.e. ESG? Do they want to dominate in certain corridors that really matter for their clients? Or is it just a killer product? But the reality is I do think it's a bit of a point of inflection for banks. And I think, frankly speaking, the low interest rate environment has probably brought that home now more than ever. Because when you had fat NIMs, it's very hard to argue with a business model. But when the business model gets stressed, be it valuation gaps, cost of running the business, let alone profitability, people have to start asking themselves, how do we really transform this business for the long term? So I do think now more than ever in a low interest rate environment, it's a great opportunity for banks to really reflect and say, what do they want to be in the next 5, 10, 15 years, given all the change and innovation we've been talking about today?
Yeah, it is. It is for sure economic pressure given the low interest rate. There's also increased competition. It is more and more a borderless world where size is no longer a moat by itself. As Jason was saying, we got agile fintechs that have been growing very rapidly, creating services and capturing demand simply because they were offering a better solution than what some of the incumbents were offering. So in all of this, when I was mentioning customer intimacy, means also being able to work with customer to provide actual tailored solution to problems. It is the off the shelf as a limited appeal, and that will have implications on not just what we want to be as a bank in terms of focusing on where is the market potential and so on, but a proper rethink of the capabilities that an organization has, the ability to deliver, the ability to build up those capabilities or acquire them either organically, inorganically, or through partnership that is a common theme that we are seeing across other parts of the industry. So overall, where transaction banking has always been somehow a monolithic part of a universal banking space of the conglomerate, the galaxy, that has been the most monolithic part. And now that monolithic factor is no longer there. And the overall connectivity and ability to see beyond the borders of the organization is what is going to make a difference for customers beforehand and for the organization itself.
Eric, do you think that the transaction banking is sort of the next growth area for other banks looking to diversify? What are the barriers for new entrants?
I think obviously, I think some of the panelists already talked about all the fintechs competing with banking in this area. I will say that transaction banking is a multi-century-old industry, and it's a backbone business for most of the commercial banks on this planet. So there's no doubt that everybody still thinks this is a very relevant business. This is where the business is going to grow. And most importantly, maybe it's also a very provocative sort of a statement of its own. I think every bank, as long as you serve corporates as one of your clients, you should have in-house transaction banking capabilities. It might not going to make you a lot of money, but it's going to increase your client satisfaction a lot. And your next question is on the barrier to entry. Well, funny enough is when I was younger, I saw what banks does is almighty business. What they're doing is a serious business that nobody can replicate. But I think that the history and my professional career had taught me that all of that is not correct. I think that why we don't have one fintech at the moment can replicate what banks does in all corner of their business offerings. We do see that the entry barrier for the industry for each component of the banking service is actually not as high as people have envisioned. As a result of that, we have seen fintechs flourish in pretty much every corner that banks is operating, just not at all of them together, at individual fragmented way. Not just about fintechs, we're also looking at the big techs, the big Silicon Valley tech companies, including Amazon, including PayPal. They all have their own stab into the market in their own way. As a result of that, I think this is pretty much tells you that everybody is still betting on this is still going to be a growth area from a different perspective. Is not only the players in this market are interested, players outside of the markets are hugely investing in this area as well. We still tell you story that in this industry still have this appeal, despite it probably just celebrated the 5,000 years sort of birthday.
Al, what do you think will have the biggest impact on transaction banking in the coming year?
Sure. Before I say that, I did want to add a comment to the previous question. So when I look at transaction banking and having been in it most of my career, I've seen the evolution of the business, right? We, early on, we were stepchildren, right? We didn't sit at the adult table, as I used to joke with people. And when you look at how it's transformed, especially for the larger banks, I think about when Jamie Dimon and Heidi Miller came into the picture at JP Morgan. It was a front and center business. People took notice of how it makes money, and it does make money. It's a very profitable business. So I do think more and more people want to get into it. I think that the challenges or barriers for them is the investment required to get in. So you'll see a lot more partnering. I know that for a lot of the smaller corporates, when I was at Western Union, we were helping them with cross-border payments and cross-border activity because they just couldn't get there without the help. And many of the larger banks didn't want to focus on some of the smaller companies. So there's a lot going on in that space. And I think the current players are going to continue to invest and make it a primary line of business. Even the way you see how it's structured within banks, it's now pulled in with corporate and commercial banking. And it's going to continue to be much more of a widely recognized business. I think the new entrants will want to get in, but it'll be a struggle based on what I said. Now, going forward to your last question about what are the biggest impacts of transaction banking, I believe, again, digital will be a huge impact in a positive way. I think cyber attacks will be the biggest concern in a negative way. I think the banks and corporates have to really partner together to figure out a way to protect themselves. And the corporates will be looking to the banks to lead the way on that, right? And you probably can't pick up the paper today or any type of periodical that doesn't talk about the concerns around cyber attacks. So I think that's going to be a big impact on the business.
The team here has said a lot of great things. It's very hard to add to that if I start adding a next layer to a 50-layer cake. But I would say that for me, the one thing that I think we probably haven't talked about is really the investment in channel. I think right now, transaction bankers are really trying to determine what is the future of engagement model with clients, especially when you have banks like Goldman Sachs, and or players like Square and Stripe and others who just continue to eat away. And we see the rise of APIs. We see the rise of increasing embedded finance and trade and ERP and Treasury Workstation. I think a big question is really what is a future engagement model for banks? And likely, there's not one answer. It's going to be a combination of embedded. It's going to be a combination of API. And it's going to be a combination of bank portals. But really figuring that right balance, as they really truly shift towards, centricity, I think is going to be very interesting. And we know from a lot of our discussion in the market, that's top priority because, as everybody said, data is the new oil in banking. Well, where does data come from? Data comes from one part transaction, it comes from one part engagement. And the richer the channel engagement can be, the better insights you can have for advisory, the better insights you can have for pricing, and the ability to take that and bundle that and take it to other clients is very powerful. So I think the engagement model for the foreseeable future is a top priority, I think, for most corporate transaction banks.
Sure. I think that I really can't add anything more to what everybody has said. But I think one thing that I suspect next year will probably have a slightly bigger role in everybody's sort of to-do list is what are the social purpose of all the things that banks can help with in light of the ESG sort of drives everybody is putting forward. I think this is something I think that, and also I sincerely hope that will be more things we're going to see in the coming year.
Many thanks again for your insights. This draws the webinar to a close. A huge thanks to my guests and judges, Al, Francesco, Jason, and Eric, for your insightful comments. And congratulations to all the winners in the Bankers Transaction Banking Awards 2021. Well done.